PayPal versus Square stock comparison. That's what we're going to look at today. My name's Jeff Beers. This is the 40 Finance channel. Let's dig in. Okay, so the first thing that we'll look at in this comparison is obviously the stocks themselves. First up is PayPal, PYPL ticker. And just a cursory glance, this is a one-year chart. PayPal has held pretty steady throughout the year, even with all the Trump drama, tariffs, etc., all those things that we saw, the roller coaster ride of 2018. PayPal held its ground pretty well. It has a current PE ratio of 47.84. Because PayPal is more or less a tech stock by some standards, that P ratio in the 40s is kind of to be expected. What we really want to get through is, will that P ratio, the forward one, come down over time? What are the growth prospects? Same thing for Square. So Yahoo puts a one-year target out estimate of it of $99, which is a pretty good return. And overall with PayPal, you have an e-commerce monster that started with eBay, got bought up by Braintree, and it really has worldwide integration. So PayPal has been used for years, it's trusted for years, big user base. The partnership with Braintree gives PayPal and Braintree an opportunity to offer traditional credit card checkout and PayPal checkout in the same service. So you're giving each customer, their preferred way to pay. So PayPal definitely has an advantage in terms of history, in terms of partnerships and current integration points across the online world. Square, on the other hand, which we'll get to in a second, is more or less the growing payment processor, right? So they're trying to get to where PayPal is, if not exceed it, and basically replace what some of PayPal's integrations are with their own brand. So let's look at Square. So Square stock, sort of similar price to PayPal at $60. You see over the one-year trend line, it has actually gone up and then obviously came back down on the recent tariffs and interest rates that everybody got dinged with. So it had reached a high close to $100. Now currently at 60, it does not have a PE ratio, it is not generating a profit yet, and the one-year target estimate from Yahoo is $86. So right off the bat, without a PE ratio, without generating profit, that's a huge red flag for me. Normally I wouldn't even go any further. But with my fascination with e-commerce markets, I know that Square has made a lot of strides in their business. And I also know that they're a very popular pick for day traders and swing traders because of the hoopla around Square. Square invented a device and continues to support multiple products that allow small businesses to have credit card reader technology basically in their palm of their hand. So if you've ever been to a restaurant or a small store where the iPad, the cash register is an iPad basically, and you sign on the iPad, or you've been to like street fair and they've swiped with the card readers on their mobile phone, that's more than likely Square technology that you have integrated with. So that's where people are bullish on Square, and they've made it cost affordable for small and medium businesses. So the bull thesis, if you will, is that PayPal Braintree is too expensive for small businesses. The integration is too difficult. Stripe comes in with a much easier bag of tricks, so to speak, and people, there's way more small businesses than there are S&P 500 businesses, right? So that, the bull theory again is you take where I live, Cincinnati, Ohio, you have 5, 10, 20,000 small businesses that can use this Square reader, whereas, only a small percentage of them, if they have a big website presence, would even be interested in PayPal or look to operate with PayPal. So can they win by volume of smaller clients, whereas PayPal is going to, at least now, appeal to the big fish, huge operation, millions of credit card transactions. So that is the comparison. Can you take small business and build up through a sort of virality of people using your product to equate the millions of transactions that PayPal does from a much smaller set of businesses? Here are some basic financials I pulled up from the two companies. I had to put them in my own spreadsheet so that you guys could at least look at them without having to go back and forth between 50 slides. So trailing PE in PayPal, we talked about the 47.84. We talked about Square not having one because they're not profitable. PayPal's PE over the next 12 months looks like it'll land about 28.64 if the economy goes well, or average even. And Square does start to turn a profit next year. So we see it right here at 84. That's a good sign. So this may or may not be a time to jump into Square if you're waiting for profitability. Again, they are not there yet. So you'll have to wait a little longer if you want to see real numbers. Total cash on hand for the most recent quarter, PayPal, $9.5 billion. So this is a gigantic company with a lot of resources. Square only has $1 billion on hand, which still isn't bad, right, for their size. $1 billion is a lot of money, and you can do a lot of damage with $1 billion in terms of acquisition, research, etc. Total cash per share, that just divides it out. Total debt in the most recent quarter, PayPal running a $2 billion debt load, while Square has $1 billion. So there's a key difference there, right? Although PayPal has twice as much debt, they're significantly bigger. So their leverage is much smaller than what you would find with Square. But beyond just the debt itself, it's the leverage of the debt that makes the most difference, and that's where you get into a debt equity ratio. Now, looking at current debt ratio, PayPal coming in at 128, Square coming in higher at 154. This should be highlighted over here because you'd want to have a smaller number on your debt equity ratio. It would actually be bigger. So I greened the wrong number here. But it just gives you a little bit of perspective when you borrow $2 billion and a company that has a lot of money, a lot of cash on hand, versus borrowing $1 billion for a company that doesn't have nearly the same resources, puts a big consideration on the assets of the company and how far do you think they can survive on debt and how much will they grow in that time. Book value per share, $12.83 for PayPal, $2.72 for Square. Technically, this is wildly in favor of Square, but there's so many things to get into. The differences between number of shares outstanding and revenues and all that. I would say that this particular line, the two companies don't compare very well for that one single metric. Okay, looking ahead on the future of PayPal, at least from an analyst standpoint, right? So I use a service TipRanks that helps me spy a little bit on analysts and which way they're moving, also tracks hedge fund investments, etc. It's a great little tool, a little pricey, but it allows me to do things like this, where I take the best performing analysts and try to figure out what is their view of PayPal at this time. You can see that you've got 18 buys, 4 holds, and 0 sells. The high point of the PayPal target is 120. The average is 100, and the lowest is 85. So I think PayPal's stock, when we went back a couple slides, was like $82. More than likely, analysts are projecting a pretty significant gain. So if you got to the high mark, you're talking about a 50% gain over the next 12 months. That's a great place to be. And at this particular price point, I think the average investor can pick up a few shares relatively risk-free, at least in the short term, knowing that PayPal is scheduled to grow and that there's a lot of positive signals in the company. Looking at analyst targets for Square, it's funny, it's a little bit of a similar story, but it's driven by different things. They have a high projection of 115, an average of 89, and there's even a low ball in here of 30. So one analyst who's on the sell side came in and they're expecting Square to fall down. I'm not sure what his or her theory is, but it'd be something to read just to get a contrarian view on Square. However, this growth from a price standpoint is going to be based more or less on significant growth from Square. So it's all going to ride on their numbers, whereas PayPal really just needs to hit estimates and continue to show more of a slow but steady growth because they're so gigantic. Square's going to have to come out of the gate and say, listen, every small business is switching to Square. We have the proof, right? We can show you the numbers that say people who used to have traditional cash registers have thrown them out the window. They're using us now. We found XYZ market segments that all of a sudden they like using our stuff. That's what you're going to need to see from Square. So it's a little bit more risky, but obviously the returns are much better. So I think Square was at 60 a couple slides ago was their price at the time. If you hit this high bar of 115, you know that's 100% gain, or just about there. So if you can stomach the risk and the fact that the analyst differences between high and low is actually, you know, $85 of a change between the high and low, if you can stomach that kind of risk and you can afford to gamble a little bit, then by all means, Square could be a great place to earn some easy profits. So bottom line for me, between Square and PayPal, Square to me is still more of a swing stock with higher risk. Obviously they're not profiting yet, so I'd like to personally see that before I did any investments. And even then, next year's PE ratio is looking pretty darn high and a little too rich for my blood. Square's current business focuses on scaling across small businesses and into medium businesses. It's going to take some time before you see them on a major online selling platform because they're all about ease of use. They're not into necessarily enterprise integration with deep reporting and things of that nature. They're trying to make it easy for folks to shop online, and I think they're doing a great job with that. PayPal is an established e-com giant. When you partner with Braintree, you've got massive amounts of high-end customers on the enterprise side, millions of transactions, tons of transaction fees coming in, and frankly, losing one or two clients over to Square is probably not even going to rock the boat too much. The key is to be, can you take Square people once they reach to a large business stage and convert them to PayPal or Braintree? That's where the win's going to be for PayPal. And PayPal has the resources to expand into Square's space. I put iZettle here. That's a European company that has some of the similar offerings that Square does as far as card readers and, you know, anything that turns a mobile phone into a cash register. And they have put in a bid to buy iZettle. I saw that there was some regulation concern. I don't know how far they got. But if the iZettle purchase turns out to be something that compares with Square, now we're talking about PayPal having a lot of resources, a lot of patents and technology to make this a more interesting race on the small business side. One thing to note too, Square has the Cash App. This is sort of peer-to-peer Cash App. So if you're out with your friends in a restaurant, you want to share the cost. This is not something I do very often with the family because I'm always paying for everybody. But these Cash Apps are getting more popular. PayPal has Venmo, which was first to market and I think was wildly popular. Square released Cash App last year or the year before. That sort of caught on with the millennials or the younger generation who, by the way, are more likely to use a service like this. So there's a little bit of a battleground here. It's designed to be a free service, and so I'm not sure what you win if you win that market, right? Obviously, you win a user base. You win the opportunity to convert those users directly into PayPal users, directly into Square business users, but it's a long haul. I wouldn't say the winner of the Cash App phenomenon is going to set the world on fire, but I do think that integrating anyone younger with your technology, even at a level like this, it's important, but I don't think it's as important as the big line, the actual top line of revenues, because PayPal is getting them from e-commerce giants. Like I said, millions per day, probably millions per hour. And so Cash App versus Venmo is the least of their concerns. They need to have an offering though. And so it'll be interesting to see where that race shakes out. So there you have it. Square versus PayPal in the race to payment processors. I personally side with PayPal. I think it's a much, much better long-term investment, but I'd also be interested to hear your thoughts. This is Jeff Beers, 40 Finance Channel. Thanks for watching. We'll see you on the next video.